Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here today on March 17th with the Forex Trading Market Analysis for you. Before we get into it, we want to just remind you that this is for illustrative and educational purposes only. Alright, and also before we do anything, if you haven't done so already, please subscribe to our YouTube and Twitch channels, Forex Trading Unlocked. And if you also want to read a good book written by yours truly, read High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions. And Amazon Prime readers, you can read it for free. With that, we're going to get into our analysis. We're actually going to talk about some of these patterns in our analysis. Alright, so we have the live active screen B. Alright, so let's see. Is this the one we want here? Yes, it is. Oh, wait, here. You guys wanted to see me. Alright, let's see. There we go. Alright, so you guys were saying that today's episode you wanted to see me. Alright, now you get to see me. Okay, so we have our Forex-Trading-Unlocked.com website pulled up for you already. And from the navigation bar, we hit the workbook workstation page. And here we have the dollar index, which made a nice little bit of a higher move high yesterday. Nothing really significant, but it was higher. Today it's a little mixed. Remember, it's a Fed day. So right now it is 9:15 a.m. Central Standard Time, and then we have until 1:15, so 4 more hours of basically sideways choppy, nothing trading to be expected. Remember, Asian markets are closed, European markets are closing, U.S. markets are open, but they're waiting on the Fed. No real big news to be expected. So the dollar index right now is pretty quiet. Let's start off with the Euro-US dollar. Biggest component in the dollar index, we had a piercing line buy signal. This is a high probable Japanese candlestick pattern. We have a target of around 120.37 up to $1.20.87 extreme. This market has been trending lower. However, right now we're viewing this as a nice corrective rally. So we are looking for a little bit of dollar bearishness over the next few sessions yet. Today is critical. It's a Fed day right now. The market's quiet. We'll see how the market ends up today. This one is not so much oil dominated where some other currencies are. So we are looking for a rally to challenge $1.1989 here at this level. A breakout here would have us leaning on $1.2037 minimal upside target up to $1.2087. As we are treading water right now, the only thing that would negate our short-term bullishness, it would be a failure from $1.1832 right here, because that would take out this buy signal and it would also confirm newer move lows. And this right now we have a lower move high, so that's why this is a key level. If we take out $1.89, that would be a higher move high after a higher move low, which would be short-term bullish, which would give us most likely enough buying frenzy and momentum to challenge this $1.2037. We got anybody in the chat? We know we got some viewers out there. If you guys got any questions about this, just chime in and we'll get to it. So that's what we're saying, looking for right now with the Euro-US dollar. Another big thing is, should we get a very strong close today? Like right now it's quiet because of Fed day. In another 4 hours when all the foreign markets are closed and we have the Fed release, we know nothing's going to happen. However, should oil start to be swinging around and the interest rates do make a move, which I don't think they will, we could have a spike, especially if we get a 30-year bond rally off of whatever is said today. Should that occur, then I think you're going to maybe see an explosive rally to the upside. I would use caution. Right now, I would not want to be on the bearish side of this trade, at least in the short run. So another thing too, what is significant is see how it's positive today right here. Should we settle closer to like the high of yesterday or definitely above the open of yesterday, that would most likely set us up for a challenge of this $1.1989. So key off if you're an hourly trader or a breakout trader, look for some momentum to the upside, and your risk is very minimal because you know that definitely below, you don't want to be long below $1.1832. Very bad idea. All right, British pound, US dollar. Let's go over here. We have the British pound US dollar, which is going basically sideways. It's snaking along, doing just what oil is doing. Oil is very quiet today as well. We have oil numbers that are coming out in another couple minutes. That may stir the pot. In fact, we can check that out as we get through this webinar. So right now we are looking for a breakout. We are in a aggressive bull trend here. This is oil dominated. As long as oil stays neutral or starts to make new highs, then we're going to most likely see a challenge of this $40.10 area. A breakout from here, let me tell you something, you do not want to be short against a breakout here. Any rally above $40.10 will have us targeting the last highs set back here in at the end of February. So $42.43. Remember, when the British pound really starts to make a move, when it moves a lot and it moves very quickly. So for it to break out of $40.10 and then within another session or two blast up, maybe even through $42.43, that could happen like literally like that. So I would be very cautious being short anywhere above $40.10. I think your risk then, even you may look at it as a low risk because of this high, and that's what you want to risk. But I think that you would be foolish because of the fact that you are an aggressive bull trend. The current slide that we've had in the British pound US dollar is not setting up for a neutral trade. This is just a corrective move right now. We're coming off a higher move high. We set a higher move low. That's at this $37.82 area. That confirms still that the market is in a bullish trend. So selling against this the action of the trend is very foolish right now, especially with this momentum. And if oil starts to rally and make new highs, get back up to like 66 or 67, $68 a barrel, or breaks out to the upside and hits like 70, you will see the pound US dollar trading not only at $42.43, you could see it all the way up at $1.44. So be very cautious. So if you're a bull, look for breaks to buy, or right now your risk is very low. Yeah, I mean, it's when you trade the pound, you have to have a little bit wider expectations to begin with. So right now we're trading at $1.39. What is it now? $1.39.04. Yeah, you'd have to risk all the way down to $1.37.82. However, should we break out to the upside, you're talking about $1.39.04 going up to $1.44. So you're looking at a $5 move. So to risk $1 to make $5, you do the math. That's the kind of trade you're looking for. So I'm not saying to get long here. I'm just telling you a breakout here has the likelihood to precipitate a big move higher and probably have a lot of buying pressure that'll come into the market. US dollar CHF. Let's wrap up the European time markets here before we jump around the rest of the world. All right, we had a sell signal, bearish engulfing line sell signal a week and a half ago. We're chopping around, going kind of sideways. The trend here is an aggressive bull. Currently, right now, we are in a corrective phase. I think that with this signal, we still have a potential to correct down to this $91.22 to $90.60 area, where I think that the dollar right now is due for this little bit of correction, and then we'll see some strength, especially if oil stays neutral or possibly sells off a little bit. And even if you get a rally in the 30-year Treasury bonds, then I think you'll see the U.S. dollar become a little bit bearish versus the Swiss, but only in the short run. Remember, this isn't an aggressive bullish market right now. The velocity of this slope of this last rally up here, this leg up, is very strong. We could just be chopping around, correcting like we did here, maybe extend it a little bit more. We may not get down to 91.22. So be very cautious with your sell right now. Especially where the market's at. You pretty much can get in where the signal was initiated last week. So right now your risk, if you are short here, $92.77, you're looking up to $93.77 basically. So $1 here is your risk, but your target is $91.22. So you're looking here at $1.50, upwards of $2, because you have $90.60 here as your lower parameter. So here you have a 2-to-1 a roundish trade, so it's a relatively and that goes with the longer term trend, which is bearish, the US dollar Swiss. I think we've seen a turn as far as with the dollar versus the Swiss. Now we've had divergence in the currencies, so where I am bullish the dollar in certain ways, I'm bearish the dollar in certain other currencies, and we are now trending in some very strong ways with certain currencies. Like for instance, the pound. Another reason it's hard to look at them and be bearish with that is the fact that the pound is bullish versus most currencies out there. So it's not just the dollar that it's been beating up; it's been beating up everything. So and since I brought that up, let's look at the British pound CHF. So see, the British pound CHF, even it's up today. So the Swiss, which is up against the dollar today a little bit. Now you look at this, the pound. It's only slightly up versus the dollar, but it's looking to blast off to make new highs versus the Swiss. Even the British pound versus the euro. Look at that. It made a newer high today. That's how strong the British pound is right now. So, and that's why these other currencies, especially versus the dollar, since the dollar is weak versus the pound, when the pound starts to rally, that helps weakness in the dollar versus those other currencies. All right, US dollar JPY. Any questions yet, guys? No questions on the chat. All right, cool. US dollar JPY. This keeps on making higher move highs. Before we had the gold trade involved with it, that is now falling off the table. This is definitely oil driven. I would be very cautious trying to sell into these highs. If anything, look for a break to buy. Key support here is $1.831. We may get a correction down to 107.5. I think that would be it if we have a correction at all with this. I think we are more likely to stay neutral above 108 and start to continue to press resistance up to $1.10. I have a longer term forecast of $1.14. That's more like heading towards June. But with the way this market has been accelerating this rally, we could just go sideways, consolidate for another week or so, and then boom, leg up to $1.10, $1.11, and literally start trending up towards $1.14 over the next month. As far as, like I said, bearish, only below 107.5 do we look for a correction to be extended down to this 106.87, 106.29 area. All right, let's look at the Australian dollar, US dollar. This one here, do we have a head and shoulders forming? Well, it looks like it. We had a shoulder here, we had a head here. This right here was a bearish engulfing line sell signal that hit the target, very nice. And then we've had this nice corrective rally going on now. The question is this forming the right shoulder? So we have our neckline drawn here. We'll have to wait and see what the market does. I would use caution when it comes to selling this market. As long as oil is firm, or if it breaks out to the upside, it'll be hard to get a big sell-off in the Australian dollar, US dollar. However, this market has been trending against the dollar so strongly for over a year now that and it accelerated big with the oil trade before many of the other currencies. So it may be stabilizing itself and looking to correct a little bit before it continues its trend higher. Right now, you could look at it as we are setting a consolidation phase. We may test support, pull back. If we take out this neckline and then fail from especially 76.19 here, this is our key pivot. Then you can see us get down to 74, maybe even 73 even for the Australian dollar, US dollar. But then I'd look for it to turn back to be neutral to higher. So I'm not looking for any extended major sell-off, but if we have a head and shoulders, usually you'll get some sort of selling pressure that will drive the market lower for at least a couple sessions to a week or so, 2 weeks. New Zealand dollar, US dollar, I think is in a big range trade. I think between 73.14 and 70.96. It's going to be a chop fest. Could we hit support? Absolutely, especially if this head and shoulders does come to fruition in the Australian dollar, US dollar, and if oil does stay neutral or it starts to pull back slightly, I think you can see the New Zealand dollar, US dollar continue to make lows. We have to wait for a signal. We don't have any levels. Just key off of those for key breakouts. US dollar, Mexican peso. For those of you getting ready for spring break, you're getting a better deal on the peso than you were a few months ago. So right now it's trading at 20.68 pesos to the dollar. Key off of this 20.34 area. The market's making higher move highs, higher move lows. Looks like it wants to make another move for new highs. Is it going to run out of gas? Who knows? I don't think so. I think we still have one more leg up that we could probably get up to 21.90, 22 pesos to the dollar, and then probably stall and then start to set a range trade. But basically, I think you do have a good floor here above 19.80, 20 pesos to the dollar. So 1 or 2 pesos here isn't going to make the difference of your trip. But you know, if it gets below dollar like 19 and goes down to 18, between 18 and 21, 22, that is a big difference. So but I think right now, over the next couple weeks, especially if you're looking to travel there, that you're going to have a good deal and probably be getting 20, 34, like I said, up to maybe 21.5 pesos to the dollar. And now let's look at the US dollar Canada. This is a falling rock that you do not want to try and catch. It made a lower move low today. Oh, it's up on the day today. What do you know? One of the currencies the dollar is strong in is the Canada. Probably because oil is really neutral today. It's a Fed day. It's quiet. I think this is just a slight profit-taking rally. I wouldn't even look at it as a rally. This market is an aggressive bear, making lower move lows, lower move highs. Unlike the Australian dollar that I think is running out of gas on the oil trade to some degree, US dollar Canada is not. There are some other factors as well. So unless we take out this downward sloping resistance line that's holding the trend intact, I don't even think you're going to get a challenge of $1.2755 here. This is your key pivot that wouldn't be signaling a turn. If we get a rally above it, it would just set us up for a basing sideways trade. I don't see any really big turn in the US dollar Canada for a while. I would wait for a correction to sell into, than to try and sell it where it's at right now, and definitely buying. I just can't even begin to see any reason to buy the US dollar Canada. Because even before oil started rallying, US dollar Canada was in a bear market. Oil just helped to accelerate it. So now, unless we get a major sell-off in oil, we get down to $50 a barrel, $45 a barrel, which I don't see that happening anytime soon. That would be the only thing I think that could precipitate such a rally in the US dollar Canada. So let's go back to the Euro US dollar where we started. And as you can see, it's very quiet. It's a Fed day. You can see by the questions here that there are none, and everyone's waiting for the Fed to be over. So we'll see how things shape up after the Fed announcement today, and we'll check back either this evening or tomorrow, see how the markets are reacting, and figure out where these points are going. So I want to thank you guys very much for attending today, and if you haven't done so, please make sure to hit that like button and pass on this video to your friends as well. And also, if you haven't, subscribed to the Forex Trading Unlocked Twitch and YouTube channels, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Once again, I'm Teddy Keckstedt from Forex Trading.